Good afternoon, traders and investors. Will back here with another one. Hope you guys are doing good Tuesday afternoon, and the markets continue their beautiful rotation, guys. This time, big tech coming back from their dip, making up for some losses here in healthcare and financial. So the healthy rotation in the markets does continue, and we are going to cover that today. So as you guys can see, SPY ended pretty much flat on the day. QQQ up 0.25%. Very decent rotation indeed. So in today's video, we're going to cover two more earnings, guys. We're going to cover NIO stock, which is a fan favorite over the last couple of years, and we're going to cover Toll Brothers. We haven't done any of the home builders. I'll remind you, the top three home builders in North America currently: Toll Brothers, D.R. Horton, and Lennar. So we haven't covered any of them this earnings season, but it's going to be a very key insight to gauge the housing market. And so that's why we're going to look into it today. And a bit of a change, guys, for next earnings season, because the videos are a bit longer when I do cover earnings, and I do want to cover 2-3 earnings per day during earnings season, I'm going to break down the videos. Instead of doing one long form video where I do all of the technical analysis, plus the earnings, plus my portfolio, I'm going to split it into two. So instead of doing that, I am going to do one video specific to the earnings of that day. So we're going to be covering 2, 3, or 4 companies in about a 15-20 minute video recap on those earnings. And then I'll have a separate video where I do the broad market technical analysis for our indexes and our major tech names and my portfolio. That way, one individual video isn't too long. So just a little quick update for that on the channel. Let me know if you agree, if that's a good idea, if you would like to see it all on the channel. I would love to see your comments and feedback down below in the comments. Appreciate you guys. So without further ado, guys, let's get into today's video, yeah? So very nice broad market performance here in terms of rotation, right? So as you can see, most of the market was indeed red today. However, when the rest of the market was red, big tech has been coming back. This is pretty much the opposite as we've seen over the last couple of days. The last couple of days has been the rest of the market has been green while big tech has been pulling back. Now, as the rest of the market pulls back from their gains, big tech steps in and starts rotating upwards. This is the most healthy rotation that you can have in this market right now. Very, very healthy indeed. So even though 85% of the market was red today, very good performance by big tech. That is exactly what you want to see to keep the rotation healthy and to keep SPY chilling at these upward levels right here. So on the one-day relative performance, you can see technology and communication services. I'll remind you, communication services, Google and Meta have been to the upside. Everything else taking a slight little breather. No red flags, however. Our markets are still set up fairly beautifully. So before we get into more technicals, guys, let's get into our earnings right away. And we're going to cover NIO stock first. So NIO has been pretty much plagued since the past 2 years as their costs have not been able to get under control. This one obviously had a heck of a rally, which I did participate in 2020, and early 2021, it was holding up gains, but now you can see sacrificing almost all gains, now back down 90% from their all-time highs, guys, down all the way to about $7.50. They did have some pretty good earnings here today. They jumped pretty much 5%, but then gave back a lot of their gains, kind of really trapped in this extended daily downtrend, kind of looking like PayPal. This looks exactly like PayPal's chart pretty much, still trapped in a weekly downtrend as well. So bulls are still waiting for that longer term breakout. Now, is it a good buy? It is a risky buy. And at these current levels, guys, the risk to reward becomes fairly juicy. So I won't be starting a massive position, but I may just start to nibble here at some contracts in the $7 range now that we've had earnings and now that the CEO has focused more on cost cutting. That was front and center in today's earnings. So I may just want to take a little nibble here in the $7 range. The risk reward is getting pretty good on this company. So let's take a look how they did on earnings today. So they actually beat on EPS by about 11%, but they missed ever so slightly on revenue here, even though revenue over the past few years has been ever expanding. The company, the number one thing about this company, guys, is that as an EV manufacturer, they are not still profitable yet. And the competition for EVs in China is very, very intense. Obviously, you have Tesla, you have NIO, you have BYD, you have Li Auto, and you have XPeng. A few of those companies are profitable. Tesla, BYD, Li Auto are profitable. NIO and XPeng are not yet profitable, but of the unprofitable companies, NIO actually has the better price to sales ratio. So if you take a look at their market cap right here, market cap of NIO is standing pretty much at $11 billion. We'll take a look at the forecasts here in terms of EPS and net revenue for the next couple of years. So you can see it's going to take a little bit of time for them to be profitable. As you can see, they're not expected to be profitable much before 2026, but that doesn't mean that they're not growing. They're growing actually fairly well. 2023 estimate for the end of the year should be 8.5 billion. And then 2024 estimates here on a forward basis for the end of next year, their estimate is going to be 12.4 billion. So price to sales in terms of next year's final revenue will be under 1. So on a forward-looking basis, the company is actually fairly attractive in terms of their growth metrics here, right? So as of now, they're only trading at about $11 billion market cap, and they will be bringing in over $12 billion in sales next year. So that is under 1 price to sales ratio, and under 1 price to sales is what you want to look for if you're looking for growth companies. Yes, there are some risks involved, as we saw, high competition, and no clear path to profitability for the next 3 to 4 years. But at these levels, guys, the risk to reward profile is a lot more attractive, in my opinion, than it is $15 to $20 here. If we only get a technical rally here, once the EV sector starts rallying back, Tesla included, you may be able to benefit from some gains here up into the mid double-digit numbers here. So maybe worth a quick look. Now let's go over their earnings call real quick here. So China's EV car maker NIO jumps 4% after reporting narrower than expected losses. So they are trimming down on losses here. And let's go into what they were focusing on. The revenue rose 47% year on year. Very, very good. They continue to expand the revenue, continue to deliver more and more cars. Investors are focusing on the Chinese electric car maker's ability to be more disciplined in its spending as it charts a path to profitability, something we just talked about. The CEO reiterated the company's focus on being more efficient here. We've identified opportunities to optimize our organization, reduce costs, and enhance efficiency. So that is exactly what we are trying to do here. Some of those efforts have already bearing fruit. NIO reported a net loss of 4.6 billion yuan in the third quarter, down 24.8% from the second quarter of 2023, but still higher than the same period of 2022. So they are doing a good job. The company also cut 10% of its workforce last month, citing fierce competition. Once again, China's EV market is incredibly competitive. NIO facing pressure from other startups like XPeng, Li Auto, and giants such as Tesla and BYD here. On top of that, Chinese consumers remain cautious on spending. As you know, China is going through a recession right now, which could weigh on NIO's strategy to appeal to the premium segment of the local EV market. Quick little tidbit here, guys. NIO's cheapest car currently stands at around $42,000 US. Tesla's cheapest car, the Model 3 in China, retails for $34,000. And this was due to a price war here. This year, China's EV market has been the stage of a price war sparked by Tesla, which has forced car makers to slash vehicle prices and put pressure on margins. So NIO's gross vehicle margin was only 8% in the third quarter, down from 13.3% in the same period last year. Tesla's gross margin on its vehicles is in the high 20%, right? 27, 28%. So Tesla is literally forcing the competition out of the market. Even with Tesla's price cuts and even with Tesla taking a little bit of a hit on its gross margin, they know what they're doing. Elon Musk knows what he's doing. He's stimulating demand by crushing other car manufacturers' ability to match those prices, right? Because Tesla's efficiency is in their production capacity, guys, all right? So just remember that about Tesla. They manufacture a lot of their own parts in-house. They manufacture a lot of their own batteries as well. So their costs in terms of vehicle production is low, which means that they can get really good margins. A lot of these other companies have to outsource a lot of these parts or have very bulky production processes, which don't allow them to get as high margins here. So NIO also anticipates it will deliver between 47,049 vehicles in the fourth quarter, a hike of approximately 17 to 22% year over year. So once again, good numbers. The fact that they're growing, the fact that demand is still there for them, that is what you want to see. And on a technical basis, they are trading very cheap. As a matter of fact, so cheap that it's pretty much the lowest price point since their monster rally back here in 2020. So it could be a good opportunity for a slight little nibble here. And I will remind you that the CEO is doing a good job of bringing down costs. So that is what you want to see, as NIO is yet to turn a profit since it was founded in 2014. The company is trying to show investors that it can balance the need for investments while also being more disciplined with costs. And I do believe that any positive news on cost control from NIO is going to make this stock have some very decent gains to the upside. And a few analysts do agree with me. You can see that a lot of analysts do have strong buy targets in the price ranges of between $12 and $20 $8. A few people have holding and a few people do have sell ratings as well. But for the most part, a lot of analysts do believe in the long-term focus of this company being able to deliver a higher share price than it currently stands right now. So that is it for pretty much NIO. Now let's dive into the second company, which is going to be Toll Brothers. So Toll Brothers, one of our home builders. And as you guys know, the US has always been in a housing shortage ever since the better part of the last 10 to 15 years. So let's see how they did on earnings today. They absolutely crushed it, guys. The earnings beat on EPS by about 10.5% and beat on revenue here by about 9%. The street absolutely loved it. You can see in the after hours, they're up about 2.34% and well on their way to all-time highs, guys. So in my opinion, on a technical basis, going to be very hard for me to pick up some shares of any home builders while they're at these highs. The buy point was in October. While I wasn't necessarily looking at these per se, wasn't sure how they're going to play into the whole housing market, but the investment thesis for the home builders is as follows, and let me just do a quick little synopsis of it, okay? So the investment thesis for home builders is the fact that with interest rates so high, the existing home market is in a standstill, meaning nobody wants to sell their homes because they cannot replace their existing homes. There are very, very few homes on the market, and the ones that are on the market, the prices are still relatively high. But not only that, if you want to get a new mortgage on a house, you're going to be paying in the 6 to 8% range. So a lot of people who have mortgages that they've acquired in the past 10 to 15 years under those rates, anywhere between 2 to 5% on either 20 to 30-year fixed mortgages, well, they don't want to give up those mortgages. So they're holding on to their homes, which means the market for existing built homes is at a bit of a gridlock right now. Inventories are not high. Not a lot of people want to sell. And so where do people go for new homes? Well, they have to go to new construction homes, to the home builders, which is why they've been doing so good over the past year, despite the rise in interest rates. And home builders, because of their massive purchasing power and because of their ability to lock in deals with large lenders, they are actually undercutting the interest rate market. A lot of these new construction homes are being sold for interest rate. When you get them through the home builder, they will offer you a mortgage anywhere between 4 to 5%, which is under your current market rate for interest rates. So they are taking a little bit of a hit in terms of the interest rate because they know they'll be able to refinance that debt in a couple of years anyways, when rates do come down, and they are willing to sell more and more homes. So what they've done is they've reduced a bit of their pricing to attract more buyers, and they've reduced the cost of capital to those buyers in the form of lower interest rates. So that has been the investment thesis. The investment thesis is that since people cannot find existing homes on the market, they are flocking in droves to the home builders. And you can see this. I'll bring up all the charts. You can see Toll Brothers, all-time highs. Lennar Corporation, almost all-time highs. D.R. Horton, your other home builders, almost all-time highs. So the investment thesis is playing out, and let's dive more into their earnings to get a better indication of that. Toll Brothers trading at a very low multiple here, 6.26 price to earnings, and they do have very, very decent earnings per share as well. They do run a lot of debt, obviously, because of the cost of capital of doing business in this line of business. But the long-term debt is not unbearable, and I'll show you that right away, guys, so you can see that they do run fairly decent profit margins over the last few quarters here, all the way up to 12 to 15%. And the revenue is ever increasing ever since 2020 and 2019. You can see a nice little uptick here ever since the shift in homes from existing homes to new build homes for the reasons we've just described has been occurring. And in terms of financials here, you'll see that their financials, yes, they do run a lot of debt, but they do have a bit of free cash flow and cash equivalents, not a substantial amount of debt, in my opinion. Nothing that is going to bear negative catalysts here in the long term for the company. So let's take a quick look into their earnings here. Toll Brothers sees full year earnings top estimates, forecasts solid demand in 2024. And this is what we will get into, right? Luxury home builder Toll Brothers reported Tuesday earnings hitting an all-time high this year as interest rate hikes and high mortgages rates stifled the supply of existing homes, boosting the market share for new homes. So Toll Brothers reported that fiscal fourth quarter EPS fell 26%. That's okay, even with the fall. Oh, you'll see why. The company's first earnings drop in more than 2 years, with revenue from home sales totaling $2.95 billion, down 18% versus last year. So a bit of a drop, but full fiscal year earnings jumped 13%. So even though quarter over quarter here, we are down ever so slightly, The full fiscal year earnings jumped 13% to $12.36 per share, with home sales revenue climbing at almost $10 billion, up 2% compared to 2022. So even though they're dropping their prices to simulate demand and they're offering lower interest rates to simulate demand as well, they are able to increase revenue, and they are, however, taking a slight hit on EPS for doing that, but they're trying to increase volume, guys. That is the name of the game for the home builders right now. The CEO, Doug Yearley, said in the earnings release Tuesday that the company saw solid demand through the end of Q4 and that Toll Brothers is working to keep unit prices lower next year as well. With resale inventories at historic lows, buyers continue to be drawn to new homes, and we expect lower rates with lower inflation to add to this already solid demand. And what they're doing here, they're broadening out. Very, very important strategy here by Toll Brothers. Our strategy of broadening our home offerings to include lower price points, coupled with our focus on increasing our supply of spec homes and growing our community count, has positioned us well for the market. So very, very, very good. Warren Buffett also took a position here in DR Horton, one of your sister stocks in terms of the home builders here. Right. And you can see this right here. Despite continued higher mortgage rates and inflationary pressures, our net sales orders increased 39% from the prior year quarter as the supply of both new and existing homes at affordable price points remains limited and demographics supporting housing demand remain favorable. This is coming from DR Horton, one of your sister companies. Okay, so that is what we want to focus on here, guys, is the fact that the pivot in the housing market is driving more sales for your new home buyers. So this was extremely good report, extremely good news, and very good guidance through 2024 for the home builders. But just keep in mind that this trade has a limited cyclical nature. When interest rates start coming down and when normal existing homes, the demand for those starts going to the upside, well, these stocks will obviously have their slight downside correction, and that is what we're waiting for. So it's a trade that's potentially going to go into next year, early next year, but keep an eye on the housing market. If you're invested in these home builders, keep a very close eye on your housing level inventories. As soon as existing home inventories start coming up and home prices start coming down, consumers will make the shift away from new homes and back into investing and back into existing homes. So just keep an eye on that, guys. So now, guys, let's get into our technical analysis for our major indexes, yeah? So SPY doing very, very good today here, closing pretty much flat on the day, resuming another flat trading day. Rotation, 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 still slightly on the overbought side, but as long as we keep getting rotation, QQQ goes up, XLF, XLV go down, fine. QQQ goes down, XLF, XLV go up, fine. That is the name of the game. The name of the game is rotation right now, and the bulls set up very, very beautifully. Beautiful little bull flag right here. No red flags, excuse me, from the bulls right now. But if ever all of our sectors start dropping at the same time and we do get a bit of a more correction on SPY, I'll remind you the levels to watch out for. 451 all the way down to 441 are your areas of support. No red flags yet on the daily, as long as we maintain these series of higher highs and higher lows. 453.43 is going to be the level to watch. Break that and we are into daily consolidation mode, and that will just equal weekly consolidation as well. Weekly bulls with tons and tons of space, guys, for a little bit of a pullback before further price increase to the end of the year. No red flags as of yet. Rotation is healthy. QQQ rotating back to the upside here. So that's exactly what we were looking for on QQQ. I'll remind you the level that we were looking out for. Sorry, I erased it on the chart right here. I will put it back on the chart right away. So 379 all the way down to about 370. So let's call it 380 to about 370 is going to be that area of pullback that we're watching for. Little bit of a gap to be filled here all the way to about 378. So if it does drop that far, don't be too surprised. A little bit of a gap fill before a potential further rally. Now, we have lost a bit of the series of higher highs and higher lows. As you can see here, we did undercut this yesterday, 380, 360, but the bulls are kind of back. We might just be looking for a lower high and then lower low correction as we may get a daily downtrend. If ever, guys, we get the daily downtrend on QQQ, have no fear. The weekly support is here, okay? So just keep an eye on that. It is a weekly bull flag. The same thing for SPY. This would just be a weekly bull flag for future price increase. Same thing for QQQ. Weekly correction is currently ever so slightly underway. This is a weekly bull flag. If we do pull down 380 down to 370, that is the liftoff zone in my opinion. Very big area of support down here. So the bulls will be making the most of that if ever we come down to it. And obviously, if ever we crack to new 52-week highs, the next area of resistance. That would just be your weekly trend change confirmed. And at that point, we are aiming for the all-time highs, guys. So looking very good, no red flags at all as of yet. XLF Financials taking a little bit of a breather, still taking a breather in our area of resistance. So I'll remind you, 36 to 37, very big area of resistance, and it's been that way for the better part of the last 2 years. So just keep that in mind. If the bulls are not able to do this in one clean shot, we may have to just two-step it. The two-step will come if ever we start losing our series of higher highs and higher lows, okay? So the area to watch out for is 35.18. 35.18, any move down below is for a new higher low compared to that, and then potential another leg up here. But if ever we fail and start setting a daily downtrend here, well, the area of support is set down here, 35 to 34.50, and it's going to be a very decent area of support. It will allow for weekly consolidation for a potential weekly uptrend formation. So if the bulls can't smash through in one clean shot right here, we may just need to two-step this into the end of the year and early Q1 2024. So keep that in mind. No red flags. Financial bulls still very, very healthy. 35.15 area is going to be the line in the sand. That is your daily higher low. So just watch for either continuation or potential rollover into weekly consolidation. Now let's move on to XLV. XLV also looking fairly healthy, guys, down 0.13% on the day, but no real red flags as of yet, guys. Still on their third leg up, right? So any move down at this point is just daily consolidation. Anything above 129.34 is just looking for a daily higher low. Very good support right now, guys. We're sitting on at 131. Look at this beautiful channel of support right here. So 131 down to about 130 is going to be that beautiful channel of support. We do have the moving averages here as well. This green line is your 200 daily moving average. The short-term moving average is the 12 is right there, and the 26 right below 130. So a lot of confluence, guys. Horizontal support, moving average support, going to be tough for the bears to get through this, okay? So just keep an eye on that. 129.34 is your higher low. So any move down now is for a new higher low for further price expansion to the upside. Very good area of support to base off of. And on the weekly looking very healthy, of just engulfed this most recent selling leg down. So if we do ever consolidate sideways or slightly down, just keep an eye in the 129, 130 area once again for a potential weekly bull flag for a weekly uptrend reversal. Then we're going to be targeting the 135, 136 area. Healthcare, no red flags. Healthcare looking good on the daily and weekly moves. Now, IWM Russell taking a little bit of a chill day today here, down 1.34%. In the grand scheme of things, not that bad at all. The higher low is set here, 177.16. That's going to be the level. So any move down is just for a higher low above this level right here for further price expansion. This is the breakout retest. We may just come down, retest this area right here, 181.54, and then maybe due for another leg up. We're currently battling with some overhead resistance here, 186 area, big area of congestion. And then the next one is obviously up at the 191 area. Very, very healthy for the bulls. No red flags, just one day of consolidation so far. And on the weekly, you guys know as well, weekly breakout is very, very well underway. So if ever we do have daily consolidation, even if we make a daily downtrend, guys, no big deal. Daily downtrend would just be weekly consolidation, looking for the weekly higher low for the weekly uptrend reversal. Still no weekly uptrend has been set. It's just one move up. All these indexes, guys, one move up, no weekly consolidation. One move up, bit of weekly consolidation. One move up, no weekly consolidation. XLV, one move up, no weekly consolidation. So we've been waiting for weekly consolidation, guys. If it comes, right, and it's going to come eventually, whether that's sideways or down, just keep an eye on all these sectors, the fact that they're very healthy. Now, Dow Jones down 0.22%, but no big deal either. And we've covered that previously on the channel, guys. So once again, 1, 2, 3 beautiful legs up here. So any move down at this point, guys, is just going to be for a new daily higher low. Anything pretty much above 35,000 right here, this green box, is just going to be for a daily higher low for further price expansion. You have a very big 52-week high support level right here at about 35,600. So keep an eye on that level. That's also where your 12 EMA, this short-term moving averages, is as well. So a bit of confluence in this area, looking very, very good on the Dow Jones. The one little thing, slightly overbought here on the RSI, and Dow Jones usually doesn't stay like that forever here. So it could just consolidate sideways, and that would cool it off. Or we could have a bit of a move down. All in all, just to say the bulls have tons of space. Anything above 35,000, just a new higher low. And on the weekly as well, weekly, this has just been one large, massive move up. Bulls with tons of space. If ever we do, for some reason, set the daily downtrend in motion here, that will be much needed weekly consolidation. 35,000 remains your most likely area of support between these two lines, right? 35,000 sorry, 35,600 all the way down to about 35,000. That's the area that the bulls could likely pull down into, and we're going to look very, very healthy. Dow Jones still only about 2.5% off of the all-time highs, so no red flags as of yet. Now, let's do something we haven't covered recently, guys. Bitcoin. We have to talk about crypto. This most recent rally on Bitcoin has been absolutely phenomenal, guys. You can see in the past 5 days here, we've put in substantial gains, almost up 18%. Crypto is doing absolutely fantastic. We had a beautiful daily uptrend here, which never really stopped. Bulls never lost the series of higher highs and higher lows. We've been riding this daily 12 EMA this entire time. So now we need to look to the higher time frames, guys. The bulls are in absolute full control. This has been one weekly move up, similar to the indexes that I've just showed you. So any pullback, the weekly RSI is getting fairly overbought here, guys. Very, very tough to initiate some buys over here. So eventually this move will be topping out, guys. We are coming to a big area of resistance. The 45,000 to 47,000 range is a very, very big area of resistance coming from April 2022. So in my opinion, that is a likely area where the bulls may have to apply some breaks, and then we may get a bit of consolidation here. On the monthly chart, monthly's looking very, very good. Monthly uptrend is obviously set, right? We were looking for that. Monthly uptrend is very, very, very healthy. But if for ever which reason we choose to use this area here, 45 to 47,000 as resistance, and the bulls pull back for maybe a couple weeks up to a month, something like that, that will be the green light for me as well to be adding to a lot of my crypto positions. Bitcoin dominance is very, very strong right now. Bitcoin has been leading the rally. A lot of altcoins are still significantly off of their all-time highs. So now it is Bitcoin's time to shine. The next consolidation for Bitcoin is when you're going to have a little bit of altcoins start grinding up here, and then your next Bitcoin leg up higher, which is most likely going to take us all the way back up into the 50,000s, and then your march to the all-time highs is underway. Risk assets are coming, guys. When the interest rates start dropping, expect crypto to really start coming up a lot. Okay, so just expect that in crypto. I'm waiting for one last pullback in crypto to initiate a lot of positions. That's why I haven't talked about it too much on the channel, but we're going to get into it. Ethereum is going to be the next position that I am going to build a substantial position in, because I do think Ethereum has a lot of room to move. And then we will be showcasing a couple other altcoins on the channel that are going to be good for some positioning. But now is the Bitcoin show. Bitcoin has shown that crypto is back. Now you have to let it consolidate a little bit. And the next rally up will be the everything crypto rally. So it always usually happens in 2 steps right now. Bitcoin really leading the way for now. No red flags, just waiting for consolidation. Bulls absolutely in full control here, guys. So we're just going to eventually wait for the daily downtrend to be set. That will be your weekly consolidation, and then we will wait for seller exhaustion to start some positions here. If we can get back under 40K, that is where I will be shopping. Now let's move into our big tech here. So Apple, very beautiful day on Apple. You remember me telling you guys over the last 5, 6, 7, 8 trading days, this was a bull flag? Well, the bull flag just broke bullish again here. So Apple, tremendous move to the upside. You can see here, what was Apple doing consolidating sideways? Cooling down your RSI and catching the moving average here. You can see it reacted beautifully from your 12 EMA. Now we have a move to the upside. So now your daily trend to the upside is resumed, and your weekly consolidation has pretty much been finished. This was a weekly bull flag. We've been talking about it for the past 2 weeks on Apple. Sideways weekly bull flag consolidation. Boom, new weekly leg up. So this will be a new weekly uptrend on Apple. Apple hasn't had a weekly uptrend since all the way back here. You saw this weekly downtrend right here, now reversed back to the bulls. Bulls in full control of everything. Control of the monthly breakout underway, control of the weekly uptrend confirmed, and now your daily uptrend has been reconfirmed after some sideways consolidation. Boom to the upside. So now any move down, anything above 187.50, just for a new daily higher low for further price expansion. And now obviously this resistance going to be acting as support. 191 is the area where bulls could pull back into if ever we fall over the next couple of days. Apple looking very good on its way to all-time highs, 196, 197 area. AMD continues to consolidate today, but very, very healthy consolidation indeed, guys. We were targeting, I was telling you guys, keep an eye on those options. 115 down to 110 have been offering some very juicy premium over the course of the past 2 weeks during this consolidation from AMD here. Very, very good consolidation. Yes, we lost the higher low right here, 118.22, but the bears have not set the daily downtrend. Daily downtrend would be something like this. If they do set the daily, we'll see the size of the bounce, right? Size of the bounce is small, react as resistance right here, and fall may just get the daily downtrend. But size of the bounce is good. We may just V-shape this, but very good daily consolidation here. It's also weekly consolidation too. So kind of pulling an Apple. A lot of big tech is just consolidating either sideways or slightly down. These are the buying opportunities, the title of yesterday's video. So weekly consolidation to the downside here, just looking for the weekly higher low, anything above 94, weekly higher low for further price expansion. Then we're going to be moving, guys, all the way up into the 130s. AMD positioned very, very well. Their earnings were beautiful. Now just looking to buy these last dips before another weekly leg up into early Q1 of next year. AMD looking very healthy. We are in the buy the dip zone currently. Even from here all the way down to about 110 is the area that I'm targeting. Very, very, very solid support all the way down through there. Now, Amazon, very beautiful day here on Amazon, guys, recovering beautifully from its most recent tiny little sell-off. And where did it react from? Well, the area of support that we've been touting on the channel for a while, 145 all the way down to 140. As soon as the bears pull down to this area, it was all bull takeover over the past couple days. You can see rejecting very, very hard from this area, recapturing the daily 12 EMA, this yellow line right here. So we have everything on our side again. Support area, we're now above the moving average. Bulls looking very healthy. And what is that doing? What is all this sideways consolidation on Amazon doing? Well, it's allowing for a weekly bull flag, guys. So bull flagging off of support right here is exactly what you want to see from Amazon. Amazon well poised once this weekly consolidation is finished for another leg up higher. And I'll remind you, the other leg higher, guys, the next stop is pretty much all the way into the 160 range. So going to be a decent leg up. Amazon still with some good risk to reward in relation to all-time highs. Still roughly 22% off the all-time highs. So underperforming the indexes in terms of rallies back to the all-time highs could be a very good candidate here for a position. Haven't played Amazon personally since the 130s, since the 120s. Maybe just looking to, as long as we consolidate sideways, I may just try my hand at a 140 put, 140, 141. May try to grab 100 shares of Amazon before a next leg up that's coming, because Amazon bulls control everything. Monthly breakout, monthly uptrend confirmed. Weekly breakout, weekly uptrend about to be confirmed. And daily bulls are in control of everything right now, looking very solid. Now let's move down to Google. Give me a quick second. I always drink coffee around Google. I don't know why. I just remember that I do. So now Google performing fairly good on the day here, guys. Up 1.35%. Google trying to make the most here of a little bounce after a nice 8.3% sell-off from your most recent highs here. So daily bears are in slight short-term control here. So we'll be looking, will the bears react once again from your moving averages around 135 here and send us into a daily downtrend? How high can the bulls get on this bounce? So they lost the series of higher highs and higher lows. Daily uptrend was lost as soon as we flushed 135.42. So it is not yet a daily downtrend. The bears still need to prove it with some more follow through here, but on the weekly, this is looking very healthy, guys. The bulls with a lot of area for consolidation. The big line in the sand level for me, 127.50. 127.50, this yellow line right here that I'm going to extend right now. Why? Because it was very big resistance in the past, very big support in the past as well. So you can see that is my line in the sand reaction zone right here. Bulls not allowing the bears to come down to it yet, but that is the area that I will be looking to. I obviously have a position at 134, but if we do pull down into the lower and the higher 120s, I will be adding some Google shares as well. Google also from the all-time highs, not that bad risk to reward, guys. They're still roughly, just about 12-13% off the all-time highs. So not as good as Amazon, but Google earnings were absolutely fantastic. They're supposed to have a very good 2024. No red flags whatsoever, and I'll show you that right now. Bulls, full control of the monthly as well, just looking for that monthly uptrend breakout. Weekly is looking good. Tons of space still for the weekly higher low. Bulls are trying to recapture the weekly uptrend. Lost the weekly uptrend right here. Now looking to recapture that. Could be an inverse head and shoulders pattern. And when that breaks to the upside, if it breaks, it usually breaks hard, guys. So keep an eye out for that. And daily, yes, the bears are in short-term control, but no real red flags. We're still kind of trapped within this most recent price range ever since the month of August here. So no red flags whatsoever, and no red flags in Google's business either. Really just price consolidation right now. Now moving on to Meta. Meta as well here, consolidating a bit on the day, 0.5% to the downside, 5% to the downside. Meta is currently in the buy zone, guys. I was warning this, 320 down to 310 is going to be the zone where the bulls react to from, right? Very big area of confluence in the past. It's been a very big area of congestion. So I don't expect the bears to get through this one very easily. If we do pull down further towards 310, I will definitely be looking to write some options. 310 down to 300 is my personal sweet spot for Meta shares. Meta currently trading decently off its most recent highs, right about 7-8%. So you got to take these dips as they come, guys. They have erased a couple of weeks of trading in just the last 5 days. So have to take the dips as they come, trading under their moving averages right now. So we will see if Meta sets The daily downtrend here, just looking for the size of this bounce. Shallow bounce and then move towards the lows. Could get a daily downtrend. That's fine. Why? That has a lot of space to consolidate on the weekly. Weekly reacting nicely from the 12 EMA right now. Weekly uptrend is confirmed. Just looking for a weekly higher low. Anything above 279 is just going to be looking for a weekly higher low for further price expansion. Meta bulls in full control. Monthly breakout is confirmed at this point. Weekly uptrend is very, very nice. No red flags. And just on the daily, bears are in short-term control here, doing some slight daily consolidation. So keep an eye. These dips are for long-term buying for me, and I will be buying here 310 down to 300 if we get there. Microsoft reacting nicely here off of the most recent drop here. So even Microsoft had pulled back here all the way up to about 5.5%. So it was a very good dip on Microsoft, but dip was short-lived, only a couple days. And now Microsoft putting in another 1% day to the upside, recovering very nicely. So this is what I mean in terms of the size of the bounce, guys. We are expecting now that the daily downtrend is set, right? We've flushed 367.26. The daily downtrend is not set, daily consolidation move down. We're looking potentially for a lower high and then lower low, right? So lower high compared to this and maybe lower low. If we do set the daily downtrend, I will remind you, if we set the daily downtrend, that's very healthy, guys. Microsoft, tons of room on the weekly to consolidate. So daily downtrend would just mean weekly consolidation is underway. Microsoft's already been consolidating a little bit here. So it remains to be seen. This is still a weekly bull flag looking very, very juicy for further price expansion into the end of the year and into early 2024 as well. No red flags on Microsoft. The buy zone for me personally, 355 all the way down to about 340, this previous all-time high area. Nice little pocket that you have down here, right? So we're talking about 355 all the way down to about 340. This whole pocket right there is where I would be targeting on Microsoft if ever we follow through with the daily downtrend. So Microsoft looking very, very healthy. No red flags. Monthly, complete month control by the bulls here. No red flags. Weekly, complete weekly trend control as well. And on the daily, just short-term control by the bears. So we'll see how far they give us a pullback. Now, NVIDIA has been one that has pulled back more than others, right? So NVIDIA off the highs, we're down about 11% off the highs. Daily downtrend was set in motion by the bears. So now the bulls are recovering here. So they're trying to put in a bounce, 487.27. Most recent lower high, right? So keep an eye on the size of the bounce. The bulls engulf this, could set up for a new daily uptrend. They could engulf this fully and set the daily uptrend that way. But as of now, just looking for a potential lower high and then potentially lower low continuation as the daily downtrend is set in motion by the bears. As long as we're in a daily downtrend, guys, keep in mind, it's just weekly consolidation and the bulls are very, very, very healthy, guys. Anything above these lows right here, 394, it's just looking for a weekly higher low for further price expansion into early Q1 of 2024. NVIDIA is supposed to have a very beautiful year next year, 2024. Their guidance was absolutely amazing. So I'm expecting good things. Good 12 EMA support here by the bulls. Right, so we are looking NVIDIA. The area that we're looking for is exactly where we stop, guys. 450 down to 440 is going to be your mark. That is where I want to see the bulls stop, because anything lower than that and the bears are going to start cutting a bit too deep into this move, and we may be in for some more consolidation here, guys. So that is what I'm looking for NVIDIA. So watch the size of this bounce. NVIDIA a bit too rich for me, guys. I can't really buy this thing until it gets close to 400. And now let's move down to our couple last ones here. Tesla here, bit of a consolidation here as well here, guys. So you can see Tesla on the day, he was up top to bottom, bottom to top here. They were up, pretty much like 5.5%, but then retracing a lot of that. So it was a very good day, top to bottom on Tesla, but giving a lot of that back right here, guys. They were up at a certain point from your pre-market lows here, up a decent amount. From yesterday's close, though, however, we were only up about 3.5%, which is still very, very good. But Tesla is looking to reset the lower time frames here, and you can see it right here on the 4-hour downtrend. No follow through by the bears. Look at this big area of support, guys. 230 is the area to watch on Tesla. 230 down to 227 is going to be that very crucial pocket for the bulls to protect. The bulls are now trying to set a new 4-hour uptrend, trying to resume the daily push that got denied a little bit. So we will see, can we crack this range? Still in a very tight range. You guys know the drill. If Tesla drops down below here in the lower 230s, I will be looking for put options, short put options to buy the stock. 225 down to about 215 is my sweet spot to be writing options on. So we will see if we get a slight move lower. If we do get a slight move over, weekly consolidation will just be underway for Tesla. It's been consolidating sideways for the better part of the past 3 weeks at this point. So keep a very close eye on Tesla. Range bound, get a break of 252. That's best case scenario, right? Because then your weekly uptrend will be resumed by the bulls. New weekly uptrend, as a matter of fact. and we'll be well on our way here into the new monthly breakout pattern as well. So just keep a very close eye on that on Tesla. Any move lower, in my opinion, for myself, not financial advice, is a buying opportunity for Tesla for the long term. And now PayPal and Palantir. So let's move into Palantir right away. Palantir down another 0.5% today. That's fine. They've set the daily downtrend here. So bears in full control of the short-term timeframes. Not a problem. Any move up here will just be probably for a lower high like this, lower high, lower low. Now we're looking for lower high, lower low continuation potentially on Palantir here, as long as the bears control this. But look at the size of the bounce. Big bounce, could get an engulfing move here, set the daily uptrend. But as long as we're in a continued daily downtrend, this is just healthy weekly consolidation. Three weeks now of weekly consolidation on Palantir, weekly uptrend, beautiful. Any move down here is for myself to be buying. That's why I've been writing so many options on Palantir. This area is the support area, guys. $18 all the way down to $17, this big pocket right here. It's been a very big area of congestion in the past here, guys. So keep a very close eye on this area. That is where I do expect a bigger reaction from the bulls. As of now, looking healthy on the higher time frames, right? Very healthy weekly uptrend is confirmed at this point. Bulls playing very good defense around here. And the monthly, we are looking for the monthly breakout of the monthly uptrend as well. So Palantir looking very healthy. These dips, decent buying opportunity for Palantir, right? On a forward basis, down 17% from most recent highs. Very good dip. Now, lastly, PayPal. PayPal looking, looking fairly weak today. I must admit, down 3.22%. No news specifically here, guys, right? But the pattern is in jeopardy of being lost. 57.10 is your daily higher low. So it's been a nice daily uptrend this entire time. Now we need to see, can they maintain a little tight range up here and continue a further breakout? Or will we lose the series of daily higher highs and daily higher lows, which means daily consolidation? And if daily downtrends start on PayPal here, well, it will be weekly consolidation as well. The move up was a fairly decent move up off of your most recent leg down here. You can see that the bulls have put in over 618. So that is what you want to see when you're a bull, guys. When you're a bull, you want to see the bulls put in a decent move on the Fibonacci level to over 62%. Capture 62% of the most recent bear leg down here, and then you have a good potential at resetting for a weekly uptrend. That is exactly what happened in this area right here. After May, they did it, and now they set the weekly uptrend here. Obviously got rejected thereafter, but this is the step number one here. So if our weekly move has topped out, going to be looking for a weekly higher low for a weekly uptrend reversal here. But now still looking fairly okay on PayPal. Even if we do lose this area, this whole area has been previous resistance. We are still battling here. So we're kind of trapped between two zones here, guys. 59 to 56, this previous range right here is what the bulls are going to try to maintain. And if not, we have one a bit lower here, all the way down from 55 all the way down to 53. So the bulls have set a lot of decent support on the way up. So I am expecting them to hold a pretty good line of defense below before going lower. But if for ever which reason we start revisiting 56, 55, I may just pick up a few more shares down here. So that's pretty much everything that I had for you guys today. Sorry for the long video again. Like I said, we'll be doing earnings a little bit different next quarter. So if you like the video, guys, consider dropping a like. Really helps me out for the algorithm. And if you're new to the channel, consider subscribing. Almost at 500 subscribers, guys. I cannot thank you guys enough. And lastly, guys, any questions, as always, please leave them down below in the comments. Macro, options, stocks, whatever you guys want, I got you. Leave them down below in the comments and I'll get to you as soon as possible. So take care. See you guys after the close tomorrow. Peace.